According to the latest data released by China's National Bureau of Statistics on August 10th, in July, China's Consumer Price Index (CPI) rose 2.7% from a year earlier, up 0.5% month-on-month. Producer price inflation (PPI) grew 4.2% year-on-year, while 1.3% month-on-month. Over the recent couple of months, China's CPI saw an uptick, but in general, it's still within a reasonable range. China's efforts in stabilizing prices has drawn wide attention of the overseas media. Such achievements in China are hard-won, particularly highlighted against the context of global high inflation. According to data released by the U.S. Bureau of Labor Statistics on August 10th, U.S. CPI rose 8.5% from a year ago, slightly lower but still remains at a high level. Eurostat released data at the end of July, estimating that Euro area annual inflation is expected to be 8.9% in July, climbing again to a record high. CNBC says China's CPI in July missed expectations for a 2.9% increase, according to analysts polled by Reuters, far below that of the US. Reuters noted that China's PPI in July has dropped to the lowest since February 2021. In another article, it also noted that China's producer inflation has cooled for several consecutive months, contrasts sharply with soaring global inflation. Bloomberg says, in contrast to the US and other major economies, consumer inflation in China has been relatively subdued. Supported by a mix of positive factors, China's prices is expected to stay stable for the whole year. Reuters, referring to a HSBC report, in all, CPI inflation remains below the PBOC's target of around 3%, providing it the policy space to remain accommodative. Bloomberg says that there was limited room for an upside surprise in core CPI in China. So with some policy support, there is perhaps room for core CPI to stabilize at its current levels. Soaring global inflation has prompted major central banks in the rest of the world to raise interest rates, while China is committed to warding off indiscriminate strong stimulus policies and issuance of excessive currency to provide more robust and quality support for the real economy. It has turned into another positive factor of attracting foreign capital to China. Financial Times says, notwithstanding risks relatively to developed nations and broader emerging markets, China presents unique value proposition for global investors. For instance, the People's Bank of China stands out as the only central bank under no pressure to hike interest rates to curb inflation. The renminbi is kept stable despite the strength of the dollar.